Welcome to the Beauty Business Strategies Podcast. My name is Robert Miraglia, and I'll be your host today. I am really excited to welcome April McDaniel, CPA, CRSP, advisor, educator, and consultant with Copsa Odi, CPAs, and advisors. That is a alphabet right there. Goodness. So, just a little background for everyone that doesn't know, Copsa Odi is widely known as the only CPA firm that truly specializes in the beauty industry. And April is a huge reason why. She brings deep experience in taxation, financial analysis, human resources, employee benefits, and leases, which means she understands the full picture of what salon and spa, med spas owners are actually dealing with day to day. And my experience with April, she's been at our conventions, she's been at our different events, she's done some webinars with us, and she makes me feel really confident in how I move forward in my business. Before we sold a few years back. So I can't imagine it's much different. Her experience just speaks for itself, and I can tell she just loves what she does, and she loves our industry. Welcome, April. We're so glad to have you here today.
So much, Robert. Yeah, you're right. This is a wonderful industry to be a part of because everyone truly does love everybody. It's wonderful. Copsa Odi's been doing it a long time, over 40 years, working with salons and spas and distributors in this space in 44 states across the country.
44, my goodness.
States. So I am looking for those other 6 diligently. It's exciting. It's an exciting time to be involved in the beauty industry. A lot of really great things happening. I look forward to talking about those things as they relate to financials and tax.
Awesome. Great. Well, let's just dive in. So on our last visit, you mentioned a new federal law that was still developing around tips and overtime. You and Christy discussed it at some length. And now that there's probably some more clarity as things have been developed, what should salon and spa owners actually understand about these deductions, and where are people still getting it wrong? What's the misunderstanding around it?
Well, with anything that relates to taxes and the IRS or the Department of Labor, there's always going to be people out there that are looking to confuse business owners when it comes to that. And so there certainly has been some bad professionals that are sending notices to salon owners saying that this deduction, the credit as it relates to FICA tip tax, is something that you can get in advance. And that's just simply not true. You'll see some social media put out right now from the Professional Beauty Association addressing this as well. So it's pretty significant that I think salon owners, as well as, and when I say salon owners, I don't just mean employee-based salons. I mean those solopreneurs that are out there, those artists that are out there doing this on their own, running a business, to make sure you're talking to a professional, because when you get things in the mail from people that you don't know, it's likely too good to be true. So that's really, really important. There's really 2 things related to tips. And one is the $25,000 tip income deduction. And so that's a federal income tax only deduction that's happening. The maximum amount that a married filing joint or a single person can get is $25,000. That's an area of clarification from our last podcast, because back during our first podcast, we thought maybe if you were married and you had 2 people that received tips that you could possibly double it and get 50, but that's not the case. It's
Logical
25,000.
thinking, but
Yeah, yeah,
logical
right.
and wishful thinking, really.
Right,
But
right. So it's 25,000 per return.
okay.
The other thing that's important about the $25,000 tip income deduction is that tips have to be reported properly. So
Hmm.
you absolutely have to be reporting them. Whether you're an employee reporting those to your owner or you're self-employed, we do need to have those reported accurately. Guys, that includes cash and Venmo and PayPal and Zelle and all those things, not just
Hmm.
credit card tips. It's everything. And that's really important. Now, with both the tip tax items, the IRS is going to give a little bit of leniency on documentation this year for 2025's return because this law didn't change until July. And so let's say you're self-employed and you don't usually separate out tip income from like a service sale or a retail sale.
Mhm.
They're going to allow you to, kind of put together some documentation for that versus having to have clear documentation. Okay.
Okay.
But for 2026, it's going to be different. It's going to need to be very good substantiation or documentation of the difference between a service sale or a retail sale and tips. All right. The $25,000 tip income deduction is reduced if a single person is making over $150,000 a year, and that's modified adjusted gross income. Okay. So it's not gross receipts, Robert, which is something that people get confused about. It's not like your top line income, it's adjusted gross income. Or if you're married, it's $300,000. So what that means is that the amount that you get to deduct, that 25,000, does start to come down a little bit if
Okay.
you're a higher income earner. The other thing that's really important is that if you're married and you decide that you're going to file separately, which you can do federally, and in some states you can do that, you're automatically disqualified. You don't get to take the $25,000 tip income deduction. And you reference the overtime deduction, you're also disqualified from that.
So really, when they say household, they mean household. That credit is only extended inside of that household, whether it's one or two people.
Yeah. And let's just say I'm married, but I don't want to file my return with my husband. I want to file it on my own. Then neither one of us qualify.
Oh, it
You
just
don't
nulls it out all the way across.
right.
Wow.
So if
Okay,
you're
that's
married,
good
you
to
have to
know.
file joint. Mm-hmm. Yep. And for some people, that is a concern. There's typically a reason why someone is choosing to file separately. But in these two products, the tip tax income, or excuse me, the tip income deduction, as well as the overtime, no tax on overtime. Both of those you're eliminated if you decide to file single when you're married.
Okay.
You can get this, but you can get the tip income deduction even if you do not itemize. So you don't have to itemize to get it. It's important to note that FICA tax still applies. So if you're an employee, those withholdings from your paycheck still have to happen for FICA tax. And if you're self-employed, you still have to pay self-employment tax.
Okay.
And finally, on the tip income deduction, the big thing is that it's temporary. It's for the years 2025 through 2028. So it's going to go away.
Interesting.
Yep.
Very interesting.
Now, on the FICA tip tax credit,
Mm-hmm.
is the one that we're seeing more of these really bad notices going out from professionals that probably shouldn't have licenses. That one is permanent. And that one is one that it's related to the FICA tax that's paid on your employees' tips. Again, tips have to be reported correctly. So it's that match that you pay. This one is not available for self-employed. Okay. This one is just for your employer. Now, we do have some folks that are self-employed, but they also have an employee, but they don't think about themselves as being as an employer, right?
Right.
So really, I want to clarify that this tip tax credit is available to anyone that has an employee that's getting tips. And this is the tax credit that was originally available to the restaurant industry only. And of course, the PBA worked really hard, as well as many other people in the industry, to expand this to the beauty industry.
Right.
And so this one is one that if you have employees, you need to make sure they're reporting correctly, including that cash. Check with your payroll company to make sure that they're getting it done correctly. We ran into a situation when we were reviewing our clients that are using some bigger payroll companies out there, that the payroll company was putting the credit card tips correctly in the right box on the W-3, but they weren't adding the cash tips into there. Okay. So the cash tips were running through payroll, but they weren't getting into the correct box on the W-3. And I think, like I said, on the other tip related item, there's going to be a little bit of flexibility this year in 2025 when we're filing those returns. But in 2026, it's going to be really important that your payroll company gets that number in the right box.
Got it.
Okay? So if I'm an owner, here's some words. I draft an email out to your payroll company and I would just simply say, hey, I want to confirm that both credit card tips and cash tips are being included correctly on the W-3. I believe, right, I'm trying to think of it right now, but I think it's box 7 of Social Security tips. Make sure those are getting in there correctly so that you can get the right amount. Now, this tip tax credit, it's going to be done on your business tax return. And then just like income passes through to you on your K-1 normally, that's how this credit passes through. And if you're not making any money and you're not paying any tax, then you're not going to get a refund for this credit. What's going to happen is that if you had an income in 2024's return, you could go back and carry it back a year, or just like any other general business credit, it can be carried forward 20 years. So, okay. The other big thing that I know we didn't talk about in that first podcast was that you do have to reduce your payroll tax deduction for this credit. So let me explain that a little bit. As a salon owner, you get a deduction for the payroll that you pay, plus the tips, or excuse me, plus the taxes that you pay on payroll. And because you're going to get a credit for some of these FICA taxes, you don't get to double dip. So you do have to reduce that payroll tax number that you're going to take as a deduction for this credit. Does that make sense?
Yeah, I think so. Yeah, it makes sense that we wouldn't be able to double dip at all. And that, these are, as a company owner, you would definitely want to, make sure that you list everything out properly and have your accountant look at that and make sure that it lines up, right?
Yeah. And the FICA tip tax credit, otherwise known as 45B, it's a complicated credit because it's a general business credit. So obviously in podcasts and webinars, we try to simplify it as much as possible, but everybody's tax return is different. This is one that you definitely want to be talking to your tax person about so that they can help you and make sure that you get as much of it as possible. But there are some limitations. So it's important that you're visiting with someone that knows. We still have people that are trying to do their own tax returns, and this is not one that I would want a salon owner to try to do on their own because it's complicated.
Right. And it sounds like it could go badly either way.
It could, and not on purpose.
Right.
I mean,
if
you're trying to do your own tax return and it's not something that you do, we do hundreds of them. And so, and we have review processes, more than one person looks at every single tax return. So it's not that I think anyone would try to do it wrong. It would just be easy to miss reducing the deduction by that credit amount. So
right. Sometimes the language is a little circular and not clear, to say the least.
Oh, for sure. And, that's what keeps us in having our jobs, right? Here at Cody. The other thing is this is on this FICA tip tax credit. It's just a state deal. Excuse me, it's just a federal deal. It's not
Right. It doesn't apply.
no state. Yep. And you still have to pay the FICA tax throughout the year. This is happening at the end of the year. It's not something that you're going to get benefit from during the year.
Right. Right. That's kind of why having a CPA such as yourself that's very well read and keeps up to the day-to-day changes is so important. And, this is probably one of the things that could improve a company's business health is just by making sure that these forms and these things are all done correctly. Systems are set up inside of the companies to help their employees log their taxes, or whatever simple form it is. Just having that done probably would go a long ways, especially for next year if they're requiring more documentation.
Well, if you think about it, our producers in this industry, probably 15 to 25% of their income is tips.
Yeah.
And that is a significant amount of money. And for many people, if it's not being reported correctly, it could be the difference that eliminates them from being able to get a home loan or a car loan or things like that. And so, we need to be, when we're an owner of a business, we need to be good stewards, and we need to make sure that we're educating our team about the importance of those things and their future.
Right.
Because we can't look at tips as disposable income. It is a significant part of your producer's income, and they need to be paying FICA on it because that's their Social Security and Medicare if they were ever to be disabled. And of course, we all want to retire someday.
Right.
And so, there's a lot more incentive to be reporting these tips than just to get these credits or this deduction. And I think that our fearless leaders in government, I think there's a sideline goal for doing some of these things. And I think that's part of it is they know that income is being drastically misreported. And so they're trying to incentivize this industry to do it. And hopefully that gets people on the right track.
Well, that leads me to my next question is, for stylists worried about reporting their tips, to them, it would seemingly mean that they're going to be losing money. What's the bigger picture they're missing, though?
Well, the bigger picture is that their future is what is really at risk. And I think bigger than that even is oftentimes professionals as well as just other individuals look at this industry as not a real business and not a true career. And the reality is it's very possible to make 6 figures and 7 figures in this industry.
Yes.
We owe it to ourselves in this industry to show the world that this is a valid career.
Yeah.
And we're just not doing that because
we've done ourselves a disservice by hiding really what income is really coming in. So, then the average gets reported that, an average stylist makes $40,000, which in this day and age is not very much, when the reality is most of us are making, a good majority are making way more than that.
Right.
And, my partner, we're at a 6-figure.
Yep.
And just on his what he does, and he's in a commission company, to be quite transparent. And, but I know that's not everywhere because demographics and, where that particular company is and where we are in the nation, that's going to vary.
Right.
but also cost of living varies and other things vary. So there is a little bit of a balance, but it's if that was reported more widely, then more people would stick to it or go, gosh, that's a career I want to get into.
Well, and we need to even the playing field. Owners and independents need to follow the law, because what happens is I have a salon that's very successful and I'm doing it all right, and the salon owner down the street is breaking the law, not making sure people report their tips. And so I have a star producer that leaves me because they're promised they can make more money down the street, but then there's this huge FICA tax liability.
Right.
That has to be paid, and it's just not fully understood. I don't know about you, Robert, with the salons that you guys work with, the strategies, but for us here at Coates Odie, those producers that left maybe during COVID or shortly after, that went to booth rent, went to suite rent because they thought they could make more money, they're coming back. They're coming back to those employee-based salons, and they're coming back with a huge tax debt. They found out that their owner was doing things the way they should be, and that they were making more money as an employee than what they can make on their own. And so, and I realize it, that's not the case for everybody, but for many of our salon owners, we are seeing those people come back because they're realizing that being an employee in an employee-based salon that's run really well is a much more lucrative type business for them.
Mm-hmm.
They can make more money.
Yeah. So, and a little less stress.
A lot less stress. Who are you kidding? Right? A lot less stress.
Right.
When you go from somebody booking your appointments for you, someone buying the back bar, keeping the retail on the shelf so that you can just sell it, doing the advertising, paying for liability insurance. Can I go on and on and on?
Oh,
when you go from that to having to do that all by yourself, hands down, it's easier to be an employee.
Crazy easier. Not that we're saying don't go for your dream, do it. Just do it the right way.
Do it. And if you're that person out there that you're trying to do it and you're listening to this podcast, kudos to you. That's awesome. But make sure you have the right professionals in your corner to help you do it right. That's what's important.
So, April, in talking about the tip tax, are there any additional risks on these new tip tax programs that we should know about?
Well, hey, thanks for asking, because I get this question a lot, because people know that a lot of times employees haven't been reporting all their tips, and so they're trying to revamp their policies and procedures to make sure that it's happening. But I think that there is an increased risk, at least for 2025, and it could go beyond that. But let me just walk through an example with you. I'm an employee. I have reported, let's say, $10,000 worth of tips to my employer. That was cash. So the salon owner has put credit card tips and has also put this $10,000 worth of cash on the employee's W-2. The employee goes to get their taxes done, and the tax preparer says, hey, I see that you have a total of, $20,000 of tips reported on your W-2. Did you have any other tips that you didn't tell the owner about? Because you're eligible for this $25,000 deduction. And the employee says, well, yeah, I got another $5,000, that I got through Zelle or I got somewhere else. And the tax preparer says, okay, great. We'll just go ahead and put that additional $5,000 on your return so that you can get that full deduction. Well, what can happen, and we've seen it happen in the last few years, is that the IRS matches up that Social Security number that's on that W-2 associated with that salon, and they end up sending a FICA tax due notice. So the employee doesn't want to have to pay both sides of the FICA. They don't want to pay, what we call self-employment tax on that. They want to pay only their half, only their 7.65. And so what happens is the IRS sends this notice to the salon and says, hey, your employee reported an extra $5,000 in tips, and you now owe us $382.50 for that FICA that should have been matched on this tip income. And so I think that's the biggest risk that could happen, is we will have more tips that are getting reported, which is great, which I think is the goal the IRS has, but we might have some accidental notices that end up happening too, because employees don't realize the importance of reporting those to their owners.
Got it. Got it. That's really important. And that would be a big surprise later on down the road.
For sure.
So getting that coordinated and just encouraging the team members to fully disclose to you as an owner on the front end will make your life a lot easier on the back end, it sounds like.
Right. And as an owner, you are required to have all tip income reported to you by the 20th of the month. That's the IRS rule. We encourage you to have them report it every payroll or every week, or get in every day at the end of their shift on your salon software and put that information in. We also have many salon owners that are going away from allowing anything but tips to run through the drawer. So no more Venmo, no more Cash App, no more Zelle, only because they can control it better.
Right.
And there's some great softwares out there that can eliminate some of the credit card fees associated with that. If you do some research, you can, figure out who those are. You can reach out to me. I can tell you who those are. But there's an increased risk of that notice. And I think it's really important that employers know that.
Great. Yeah, definitely.
So thanks for asking.
So I'm going to reframe what we're talking about a little bit. Financial literacy is one of the 4 pillars we teach at Strategies. And you mentioned, some of the people that we serve, how does understanding tip laws or any tax law for that matter connect to running a more profitable business overall? And I think we touched on it just by reporting properly, but is there anything else? We're touching on the tips, we're touching on reporting properly. What else is going to really improve the overall health of a company that you would say?
Well, when you're a business owner, cash is king. To be able to invest in your people, to be able to invest in your salon, to be able to, take care of yourself as the owner, cash is king. And when you are properly reporting your income, when you have a good structured chart of accounts where you can calculate benchmarks and compare yourself to the industry and see how you're doing and know where you need to improve things, when you're keeping really good track of your expenses so that anything ordinary and necessary can be expensed and deducted, those are really important things. And keeping up to date what's going on with the tax code is important because things change all the time. Like, for example, the meals deduction is changing in 2026. If you've been providing meals as part of a convenience item like break room snacks and meals to your people, which we all do it. I mean, COPSA OD does it. Why wouldn't you want to do that? Maybe you have a staff meeting every Monday and you bring in a meal for that. Well, that's not deductible anymore. In 2026, that's going away. And so, if you're not keeping up to date on these things, then you could do something wrong. Now, the reality is, Robert, you have to get audited. But I will tell you that the IRS is getting better and better about using AI to review returns and other ways of technology to determine whether or not they should audit somebody. And I think there's a chance there's notices that get going out this year as people start to try to make changes. And it could be that someone just doesn't know that this change happened. Now, staff holiday parties are still fully deductible. So that didn't change. But the biggest one that I see is this meals in the workplace as a convenience for staff meetings. That's a big change. I mean, I'm sure, Robert, you see that wherever you're at. It's a big deal. And so is, if you have a staff birthday party or a a party to recognize your people for having a really great quarter, those meals aren't deductible anymore.
Mm.
So I don't really know why that's happening, but that's what's happening. So
Definitely some food for thought, or
for
not.
sure. Right? And then
Right.
the other thing that we're seeing a little bit more of, which really hasn't changed, but we're seeing more, is people trying to do international travel as part of business expense.
Mm.
There are some key rules that surround that. I know of some really great conferences that you can go abroad to. And by golly, you should do it if you can do it. But because it's what a wonderful experience to be able to go abroad or take a cruise or whatever. But there are some international travel limitations on deductions, as well as if you do some type of luxury travel like a cruise ship conference. So, be talking to your CPA about that. Don't just assume it's fully deductible and think, oh, yeah, I'm going to go do this, because there are limitations to those things.
That's good to know too. So really a clear line of communication with your CPA is really important, especially what you're thinking about doing in the future, so they can help you devise a plan that is smart and sound and not going to get you in trouble when you get back.
Yeah, we want to make it deductible. If we can turn a regular expense into something that is ordinary and necessary and eligible for deduction, that is like winning the lottery, right?
Right.
We want to do that, but if we don't know about that before you do it, we can't give you the information that you need to make a really great decision.
Right. Well, so we are going to be in Austin at our next event in March coming up. And so what conversations do you want to have with the owners in that room?
I can't wait to talk to them about the importance of financial literacy in that room. I can't wait to answer their questions and hopefully clear up some of the gray areas as it pertains to these new laws, and just to really give them a pat on the back, because if they're at Next, they want to do things that are awesome. We've been working with strategies for decades, probably since Neil founded the company.
I think so.
Has been working with strategies.
Yes.
And our value systems align very well, even as this transition has happened, with Barbara and Brett owning the company. COPSA OD and strategies remain very good allies, I guess you could say. And I just think I want to help them, but also help them celebrate that they're there. And being at Next is just showing that you want to be a better business person. And that's what we do every day with our clients, is try to help them be better business people. So,
right. So if someone's listening and they want to come to Austin with their finances in order, what's the one thing they should do between now and then to kind of get things together?
So take a look at your year-end financial statements. Hopefully they're prepared. If they're not, then get them prepared. You may even have an opportunity to get January and part of February ready. Have that balance sheet and that profit and loss ready. Take a look at them, write down your questions, and come find me. Ask me the questions. Let me help you.
Yeah, you are a resource. And what I love is that you're like so right there just to help anybody that needs it. And we appreciate that greatly. So one last question before we go. What's the biggest money mistake you see beauty business owners make year after year?
Not thinking about break even, not thinking about what amount of sales is needed to cover the cost of something new they decide to do.
Yeah.
So what is the return on the investment that's needed in order to take on something new, but also not taking the risk. To grow, sometimes you have to take a little bit of risk. And so if that's having a really great salon manager, I think knowing what that's going to cost, but then also determining what you need in growth in order to cover that, and
Right.
really having an accountability partner to help you get there.
Right. Yeah. Because someone like you would be able to kind of walk somebody through, what the potential costs are going to be, but what the potential outcome could be for the greater. Because sometimes we as owners would get a little short-sighted on oh gosh, I don't have that kind of money now, or I don't want to spend that money now, when really if we do, we would progress a lot further and get a little more on our bottom line
Right.
in the long run.
And Robert, I see it both directions. Your example is 100% true, but then I also see the other side of that where people jump too quickly.
Yes.
And they're willing to spend thousands of dollars on something because it's shiny.
Yes.
And so we have to think about that a little bit, or fun. Maybe it's fun. And so with, really think as a business person.
Yeah.
Not as, and I love the creative side of this industry. I absolutely love it. But sometimes we have to, take our creative hat off a little bit, think as a business person, put it back on. Let's mix it together a little bit, find the best happy middle ground and make these dreams happen.
Yeah. Well, great. Hey, big thank you to you, April McDaniel, for joining us in today's episode of Beauty Business Strategies podcast. If you want to learn more about April and the team at Copsaotti, we'll drop the link below, or you can visit at kopsaotte.com. That's copsaotti.com. Thank you so much, April. I've really enjoyed having you, and I always learn so much when we get to chit-chatting.
Anytime. And I can't wait to see you soon.
See you at next.
Yeah.